Friday, October 12th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about the Dow Gold Ratio. I've spoken about it many times in the past. Recently on October 1st, I did a video entitled the Dow Gold Ratio will tell you when the reset is complete. And I'll do an update on the Dow Gold Ratio. I'll look at the markets. Of course, the markets are very volatile at the moment. We had a 500 point plus drop in the Dow yesterday. We had gold soar. It might not be a move like in cryptocurrencies, but for gold is very unusual. It went from a low of 1191 yesterday to all the way to 1225. It did outperform silver, or kind of did the same as silver. Usually you expect silver to do better when you have a move like that. But it's understandable, though, with the overall markets under pressure, that silver might not do as well. Yeah, look at the Dow Gold Ratio. Look at the impact the Federal Reserve has had on the financial markets through the Dow Gold Ratio since its creation in 1913. It's around 840 this morning. And before I go into that, looking at the charts, I will look at what the markets are doing this morning. So gold is corrected back a little bit, which is not surprising, seeing we saw a 2% move higher, 2% plus even. We're at 12.19 right now, down about $5. The range has been 12.15.66 to 12.25. The move yesterday was quite kind of surprising, but and unexpected. And we broke through a key resistance, as you can see here, from the range we've had since August. And the key level was around 12.12, 12.14. And once it broke that level, gold really zoomed higher. Silver, of course, is underperforming at the moment. The gold-silver ratio is still quite elevated. It's around 83 right now, almost 84. So the Dow lost 832 points on Wednesday. Yesterday, it moved all over the place. It was unchanged at one point, and then it closed down about 545 points. And after the close, I was watching the markets. It went down a little bit for a minute or a few seconds, and then it just started moving higher, and it was up over 100 right away in the futures, and it's kept going up. Right now, we're up 420 at 25,470. So it's up 1.68%. The high is actually being about 100 points higher. So we are off the highs. S&P is up 160. Sorry, that's the NASDAQ. S&P is up 48. 2775, up 1.76%. The NASDAQ 100 future is up 2.4% or 166 points. So what's going on? Who knows? A lot of people will say it's the PPT or the the ESF, Exchange Stabilization Funds, and that the markets will never fall again. It's all manipulated. Maybe they came in yesterday. Maybe Treasury Secretary Mnuchin, he was away, I think, in Bali, so he couldn't. Maybe he got back home. I'm not sure. They said, oh, we need to pump this market up. Maybe they did that. But the thing about manipulating the market is that you can only manipulate the market successfully in the long run if you're going with the overall market trend. And that's why, we had a crash of 08, 2000, 87, and we've had crashes before, even though there's been manipulation. It's because the market is bigger than the government. The government cannot dictate the markets. But right now, that's where we are. It's not surprising to see a little bit of a rebound and consolidation in the chart. We could even see in the next few weeks the markets consolidate a little bit, or not. Maybe we'll come in, the markets will open this afternoon or in the morning in New York, and we could go back down. Who knows? But very volatile. It's a trader's market, a good market for traders. So that's the situation right now. The currencies, yeah, the pound's still fairly strong, 132.52, up 0.15%. Euro 116.01, unchanged. I have to say, gold yesterday outperformed. Went up a lot against the dollar, and it went up almost as much against the other fiat currencies. So gold did well yesterday against all fiat currencies. The dollar yen 112.36, up 0.2%. So yeah, fairly steady, the currencies. Dollar yuan 690, up 0.4%. And it looks like the U.S. Treasury and the Chinese government have come to an agreement that the U.S. Treasury will not mention China as a currency manipulator. They've probably done a deal for something. I don't know. It's all behind closed doors. They don't tell the sheep or what they do exactly, these people. So I don't know. But something, they've come to some kind of agreement. Not only on the manipulation statement, but the Americans must have gotten something back from the Chinese. What about the bond markets? Well, the bond markets, we're still above the high that we had earlier this year in terms of the 10-year yield, which was around 312. This morning, we are at 317. It's up 2 basis points. There's probably been talk in the mainstream media, and I don't really watch that much anymore, that bonds have rallied, on the back of the stock market drops. Yes, they have rallied because we got up to 326. The yield has come down, and then the prices go up. But I can tell you that in the past, if we had these big drops in the stock market, the bond market would have rallied a lot more and yields would have dropped a lot more. So I'm still not convinced. I still think we need to keep a very close eye on the yield, 10-year yield. And the higher it goes, the worse it is for the whole overall system, financial system. Italy, yeah, it seems to be, kind of stabilized, but still at high levels, 352, the 10-year yield. So now the Dow Gold Ratio. Why is this ratio important? Well, in my opinion, and I guess in the opinion of many others, it's a ratio that indicates how overvalued or undervalued financial assets are in relation to the real world. Gold represents the real world. It's a commodity. It's it's been money that's been durable and it's held its value for over millennia. And you can believe Jeff Christian that says that it isn't, that it's just a trading mechanism, but he's full of rubbish in my opinion. So that's what this ratio tells you. And whenever this ratio gets very high, it means that the financial markets, paper assets, are too overvalued and that things have gotten out of hand. And then there is usually a correction and this ratio goes back down. And there are levels at which, the correction or, the reset of the system happens. Before I go further into the short-term picture for this ratio, I'll show you how the Federal Reserve has affected this ratio. They're supposed to have come in and made things, 1913, make the currency more elastic, make things, they'd had the crash in 1907, and they're supposed to come in and make things more stable and make the dollar elastic and hold its value. But they've done anything but all that. And Trump said the Fed is gone crazy. But I think the Fed, I think someone else said this. the other day. But yeah, the Fed is a crazy institution. It's not just now that it's crazy, it's been crazy for over 100 years. So here you have the Dow Gold Ratio from 1800, and you can see that, prior to 1913, that ratio was quite, it was going up, of course. I guess the development of the economy, growth, industrialization. But you can see that it was only, there's very little, not that much volatility as we have now, as we've had in the last 100 years. And you can even see that there, just before 1840, that's when President Jackson did not renew the charter of the Bank of the United States. And the bankers had a hissy fit, and that's why that ratio went like that. But after that, I guess, if you strip out the Civil War, it was quite a steady, ratio, move higher. Of course, am I saying that without central banks, things will be perfect? No, markets move, but they won't move so much to, make things really unsustainable and create massive disruptions. So you can see now we get into the fiat or fiat capital era, as World Gold charts call it, or the central banking fiat era, and you can see how bigger, more amplitude these moves get. And some people argue, that when the ratio got up to around 42 in 1999, that was the top, the recent top of the credit cycle, and that in real money terms, that cycle is still shrinking. Yes, the correction we've had since 2011 in that ratio, when it got to just below 7, is just a correction. And if we were really in a full-blown real money credit expansion, would be back above, that 42 level. So my argument is that we haven't seen that ratio correct yet, all the way to where the rebalancing is done. And why, you could argue, oh, but that level at just below 7 was the bottom. But I don't think so. I think, as you can see by the lines that were drawn on this chart, that we will see this ratio back to 1. When? Difficult to say. And I think, the policy of the central banks of QE, money printing, zero interest rates, negative interest rates, they threw everything at it to try to delay the correction that we needed. And that's why this ratio is corrected back up. They've done it before, as you can see there, in the 1970s. But it didn't. It doesn't work, and that green line looks like it's the the mean, or the mean of that ratio, where historically, and right now it just looks to be above 20, and that's where we've pretty much topped recently. And I'll show you some charts now, shorter term of this chart. So you can see here, this is from January 2016. You can see how this ratio has been going higher. And now we got up to almost, I think that was October 3rd. I calculated it maybe a little earlier. We almost got to 2250. And now with the drop in the stock market and the rally in gold, we almost got back to 20 yesterday. And you can see that that looks like a top to me in the short term. We'll look at some more longer term charts. So we've got this one here from 1990. You can see the top there, just above 42, around 42, 45. And we are near that top. But I personally think that we're ready to move lower. That's my call here. Yeah, I could be wrong. But I think we are almost like, this move has been like the one back in the 70s when that ratio rallied back up. People thought, oh, everything's fine now. And then all of a sudden just turned around in, from 1977, 78. And we saw, the Dow and the gold trade around 800. And that's why the ratio went to 1. And I think this time we could even see it drop below 1 because every, we had the reset back in the 30s when that ratio went from, just above 20 to just around 2 or maybe even less. I'm not too sure. And that was probably 1933, 34. And then Roosevelt reset the system with the Gold Act of 1934. So I think we're ready. We are on the way to for that happening. It's very difficult to predict things, but when things are going to happen. But it's very easy to predict things that are natural in markets. And why do I say natural? Well, because gold has been a measure of value for thousands of years, and it's not going to change. And the Dow has been a measure of financial assets for many years, and it's not going to change for now. So it's natural that that ratio will tell us when things have, been rebalanced or reset. At what level each of components of this ratio will be, very difficult to say. But we will know when that will happen, when that ratio is very close to 1. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. And just to let you know, I'll probably be doing a live stream later on today at the end of the day, US time. I wish you all a good day. Take care, and I'll talk to you later. Bye.